What is up guys, my name is Ignas, welcome back to the channel. So I have been putting together my portfolio of various dividend paying stocks, and so far I'm quite happy, at least with my most recent picks. So the portfolio is quite diversified, as there are at least a few names for each market sector. But there is this sector where I have no companies in yet, and that one is energy. So today I want to take a look into a few energy names, and that in particular will be the oil and gas industry. So let me bring up the three names that we'll use for today's dividend comparison. First stock is Exxon Mobil, ticker symbol XOM. With oil going down recently, the price is also not performing. In 1 month it is now lower for 11.83%, but if we take 1 year, we saw quite a decent growth, higher for 38.16%, though that seems to be a run from the pandemic lows, as if we zoom out to 5 years, the stock went from $81.28 in 2017 to just $85.12 now, higher for 3.97%. So there was not that much of a change in the market cap in these 5 years, as the company is now worth over $356 billion, and with the price going higher this year, the dividend yield is a bit more modest, but still quite up there at 4.17%. So Exxon will be our first name for today's comparison, but I do have two more stocks to put against it. So second name is Chevron, ticker symbol CVX. 1 month's performance is even worse, minus 16%, though in 1 year the stock is also up, plus 34.78%, and it's interesting that it's pretty much the same in 5 years, with the stock going from $104 in 2017, up 34.57%, to $141.16. The market cap is around 2/3 of Exxon at $276 billion, and they share quite a similar dividend yield at 4.04%. So these are the two large oil names, but to make the comparison more interesting, I do have a third one, and that is ConocoPhillips, ticker symbol COP. 1 month's performance is the worst out of the three, minus 24.25%. On the other hand, in 1 year growth seems to be the best, as the stock went up for 41.57%, and that is even better in the last 5 years, where in 2017 it was trading at $43.45, almost 2xing to $84.88, up for 94.84%. Market cap here is just 1/3 of Exxon at $109 billion, though the dividend yield is also coming close to those 4% at 3.56. So these are the three names that we will be looking into today, and to make the comparison happen, let's go into Google Sheets. So in order to make a dividend comparison happen, I've picked 5 different metrics to look into. These are dividend yield, dividend payout ratio, years of consecutive dividend increases, estimated 5-year compound annual dividend growth rate, and dividend yield compared to its 5-year average. We will be picking the numbers for each name and compare them between each other. The best stock under the metric will get a point, so for a ticker it is possible to get 0 points at worst and 5 at best. After assigning the points, we'll calculate results, and then the stock with the most points will be considered the winner of this comparison. I've tried to make the rules as clear as possible, so let's start. So the first metric we'll take a look into is the dividend yield. It is calculated by taking the annual dividend per share and dividing it by the share price. Exxon Mobil is currently paying an annual dividend of $3.52 per share, so at a price of $84.59, that is a dividend yield of 4.14%. Now switching to Chevron, their annual dividend is $5.68, so at a price of $140.14, this is here a yield of 4.04%. Third is ConocoPhillips. They are paying $1.84 per share, so at $84.62, that is a dividend yield of 2.17%. Second metric we are taking is the dividend payout ratio. The percentage here shows what part of company's earnings are paid back to investors as dividends. So for Exxon Mobil, the payout ratio is at 35.85%, meaning that just over 1/3 of company's earnings are paid back to shareholders. Now let's take Chevron, and their payout ratio is very much similar at 35.88%. But now with ConocoPhillips, the situation here seems to be way better, with their dividend payout ratio at 14.04%, meaning that the company is paying only around 1/7 of their earnings back to investors. Metric number 3 is the years of consecutive dividend increases. So the number here shows for how many years the company has been consistently increasing dividends for at least one quarter every year. In Exxon Mobil's case, they have been increasing dividends for 38 years straight. Now if we look into Chevron, that is very much similar with a few years down at 35 consecutive years. But the situation for ConocoPhillips is way different, as they only have been increasing dividends for the last 5 years. Now for the next metric, we'll be taking the compound annual dividend growth rate. We'll pick the 5-year average, including the estimate for 2023. So for Exxon, the 5-year growth rate is at 1.73%. Now if we do a switch to Chevron, the dividend growth here is at 4.86%, but it looks like ConocoPhillips has the best metric here, with its 5-year dividend growth rate at 9.67%. Now the last metric we'll be using is the dividend yield compared to its 5-year average. And for that we are in my dividend stock watchlist. So here we have the tab for Exxon, and this is here the stock's dividend yield history for each quarter of the last 5 years. So out of this information we can calculate that on average in those 5 years the stock was trading at a dividend yield of 5.12%. And then we can compare this number back to each quarter. So we were getting the worst yield back in 2017, where the stock was trading at 3.64%, under the 5-year average for 28.93%, and best one in 2020 at 9.14%, over average for 78.45%. But if we would be buying the stock right now at a yield of 4.14%, unfortunately we aren't getting the best deal, as this means we are getting the stock under the average yield minus 19.17%. So this is here the number that we will be comparing. Now let's take Chevron, and we also have its history. So on average in 5 years, the stock was trading at a dividend yield of 4.30%. It seems that the best time to get in was back in 2020, where the stock was trading at a dividend yield of 5.80%, over average for 34.99%. And worst one was with this year's surge in price, where the dividend yield dropped to 3.24%, under the 5-year average for 24.59%. But if we would be taking the stock right now, where it is trading at 4.04%, that is closing into the average at minus 5.97%. Now for the third we have the tab for ConocoPhillips, and in 5 years on average the stock was trading at a yield of 2.58%. So worst we had it in 2018 at 1.60%, under average for 37.97%, and best one was by the end of 2020, with a dividend yield of 4.92%, over average for 90.73%. But getting the stock right now at 2.17%, that is unfortunately under average for 15.88%. Now if you would be interested in doing a similar analysis for other dividend paying stocks, you are able to do that by following the first link at the top of the description. Otherwise, share a ticker symbol in a comment below, and I'll consider adding that into the watchlist myself. Maybe you could share some interesting opportunities in the market that I'm still missing. So now that all the numbers for the comparison are in, we can start assigning points. Exxon Mobil takes the dividend yield metric with the largest percentage of 4.14%. Then payout ratio is to ConocoPhillips at 14.04%. Exxon has the most consecutive dividend increases at 38 years. Then 5-year compound annual dividend growth rate goes to ConocoPhillips at 9.67%. And Chevron gets the point for the last metric, trading at a dividend yield which is 5.97% below its 5-year average. So the points are assigned and we can calculate results. Exxon Mobil got 2 points, Chevron 1 and ConocoPhillips 2. This means that we currently have a tie between XOM and COP. Since Chevron only took one metric, let's find the second best, and that is ConocoPhillips, where the stock is trading at a dividend yield which is 15.88% below the 5-year average. So an additional point is added to COP with the 5th metric, and then with 3 points, ConocoPhillips is considered the winner of this comparison. So that was it. Make sure to support the channel and leave a thumbs up under the video. Are you holding ConocoPhillips right now? Share your stance on the name or your pick in a comment below. If you would be interested in getting access to my dividend watchlist, then consider memberships. By becoming a member, you will get access to Discord, where I share all my Google Sheets documents and all the buys and sells exactly when I do them. This could be a great option to track my moves closely. Last week I've looked into several other companies, so if you would be interested in any of these, then click on a video that is currently on the screen. And that was it from my side. Thank you for watching, and I will be seeing y'all in the next one.